So the trade war is getting down to strategy and tactics, and today we need to talk about what China is doing and what the United States is also planning. Now we're at a point where there's simply no communication channels left. It's the US threatening Beijing, China escalates back, and Trump goes ballistic a few hours later, and you rinse and repeat this cycle. At the heart of Trump's trade war is a realization that the US is broke and can't even sustain deficit spending. Even sustaining the US military is getting impossible.
About all of the people that say, well, deficits, if we have a deficit with the country, or if the country has a big surplus with us, like China has a massive surplus, that they take and they spend on their military. Well, we don't want that. I don't want them to take $500, $600 billion a year and spend it on their military. I don't want them spending money on their military. And I shouldn't have to spend money. We shouldn't have to spend it either.
But trying to reverse decades of mistakes in just 6 months by itself is a really big gamble. It is a mistake. When Trump gave China an ultimatum, back down now or face a 50% additional tariff, he basically sealed the fate of the US economy. It's not going to look pretty. China is also rejecting America's blackmail, and they have officially thrown down their gauntlet as well. Beijing will escalate back, and they are fine with Trump raising the tariff to beyond 100%. And by the time you watch this, the new effective rate might be 104% tariff on Chinese imports, maybe even higher. And if we look at the actions taken by the Trump administration, it's clear as day the agenda is to contain China's economy by hitting their exporters hard. Now, when Trump announced the reciprocal tariffs, Vietnam was hit particularly hard. Their exports were hit with a 46% punishment. And if we consider the type of products they make, like t-shirts and shoes, the profit margins are not huge, they are very slim. Many companies could go under with Trump's new tariff regime. And the country has reached out to try to negotiate with Trump. They offered to reduce all their tariffs on US goods coming in, which is quite a drastic move. They basically capitulated. But Navarro, who's Trump's trade advisor, dismissed it. He told Vietnam their offer meant nothing. What the US really wants is for Vietnam to cut or reduce trading relations with China.
Is this they're coming now and saying we want to talk, we'll lower our tariffs to zero if you lower your tariffs. That's not the problem. Vietnam is a great example, Laura. They sell us $15 for every one we sell them. Zero tariffs would get us no reduction in the $123 billion deficit we have. And five of that $15 they sell us, you know what? It's China. It's that clip you showed about Cambodia, how China just comes over.
Thing, right?
It's the same kind of, we call it transshipping.
But here's the issue. Trade is global and Vietnam imports a lot of intermediate Chinese goods. Is that considered part of the transshipment to the US as well? And if that's the case, should the whole world stop buying Chinese components for their own industries? And that's why Beijing can't back down, and they are now taking serious measures to protect their own economy. And the first trigger pulled is allowing their currency to weaken to boost exports. Beijing is now allowing the RMB to fluctuate beyond the 7.2 level to the dollar. This is important because a currency devaluation is a double-edged sword. If it strengthens too much, exports might suffer. But if it weakens too much, it will spark fear in China's stock market. Beijing also can't depreciate their currency too much, or it will hurt the exports of their neighbors. So this is a very delicate balancing act. But it does tells us that China is willing to play it to the razor's edge and they are firing on all cylinders. Trump doesn't like China managing their currency because the US simply can't do the same thing, not right now. The dollar is falling because of falling demand for US assets, and this increases domestic inflation. He can't strengthen it unless he U-turns on his tariff war or gets the Federal Reserve to hike rates, and we know by now both of which simply won't happen. Another trigger pulled is China moving to defend their stock market. And normally the Chinese government doesn't care about the equity markets, but moving to prevent a collapse shows China wants to tell the world their stocks can be stable in the absence of a Trump put. The US has no ability and no desire to save the stock market, but in China, we have the fiscal room to grow your investments. It's the same with global trade. While the US is turning inwards, China is moving outwards to fill in the gaps which Trump is leaving behind. On Monday, China's national team mobilized $42 billion for big stock buybacks after their markets crashed. It's important to take a step back and understand why. Normally, the central government hates propping up the stock market, but this is part of a bigger agenda to globalize the entire economy. It's not just to defend prices on a screen. China wants to attract all sorts of capital, not just foreign investments to build factories in Shenzhen, but foreign dollars into their Hong Kong markets. In contrast, the US stock market is in total chaos. And if you were in the markets yesterday, you probably know what I'm talking about. Nothing in the US markets makes sense anymore. It's all about speculation and news headlines revolving around Trump's tariff war. Whether he will delay it, grant exemptions, or double down and make things worse. And this chart shows it all. At around 10:15 a.m. yesterday, we had a rumor that the Trump White House is considering a 90-day pause in tariffs for all countries except China. And within minutes, the market spiked up by over 3%. And 15 minutes later, the markets collapsed by over 5% once the fake news was revealed. It's a disaster show. The S&P is trading like an emerging market stock, and it might get worse the longer this tariff war continues to rage on. Besides China taking advantage of this chaos, what Trump is doing also isn't good for US assets. The financial risk of holding US bonds is greater than ever before. Now, in 2022, Biden did the unthinkable by seizing Russia's assets, and that reminded the world of US confiscation risks. But what Trump is doing now is a reminder that the dollar is not invincible. Since Trump took office, the strength of the dollar has been dropping. The index went from a peak of 110 to a low of 102, and that's nearly a 9% or even 10% drop. For US consumers, imports get more expensive, so it isn't good. But for investors, it's a nightmare as well. When a foreigner buys dollar denominated assets like US debt, they are hoping for the dollar to be stable. But if the dollar is so volatile and assets needs to be sold when the currency is weak, investors will take a hit. So even if you get a 4 or 5% yield on a US Treasury, what's the point when the dollar has dropped by 6 or 7% against other currencies? You will still be sitting on a net loss. And here's the crazy part. The dollar is supposed to be the cleaner shirt in the dirty basket. It's supposed to be a traditional safe haven asset, but it's moving so wildly thanks to the trade war. And if Trump continues this trade war, he'll make it even harder for foreigners to continue buying US dollar assets, especially treasury bonds. And let's not forget in 2001, foreigners held 72% of all outstanding US debt, but last year it was less than 58%. So just imagine what happens when Trump dismantles free trade. By closing up the US consumer market and from all the trade retaliations, all this poses a big problem. Fewer goods will be sold into the US and exported from the US as well. The demand for dollars to facilitate trade is going to drop, and this could also drive the value of the dollar lower as well. But something happened in the bond markets yesterday. As we move towards a recession, yields should be dropping, but on Monday we had a sudden spike up in the 10-year. This drove the yield from under 3.9% to well over 4.2%, which is an insane move in just a couple of hours. Now, there's a big speculation on who did it. A big possibility is China dumping another $50 billion in bonds. We only know in a few months, but the fact still remains. US assets, especially bonds, are becoming too volatile. They are becoming uninvestable. And this is horrible when the value of the dollar is getting hammered. If this escalates, we could see central banks and foreign investors either dump their holdings or not buy at all, and this will keep borrowing rates higher than they should be even during a recession. Here's the problem not many people know. Foreign holders of US bonds are focused on longer dated treasuries. They prefer to hold 10 to 30-year duration debt, but this is the exact type of bonds that affect the real interest rate in the US economy. Major banks already see crashing demand for these bonds and longer term rates rising over time. We could see global retaliation on the trade war spill over into the US bond market. And should foreigners dump or stop buying, this will steepen the yield curve even further. Borrowing costs in the US will go up. There are 100 ways Trump's tariff war can backfire, and this is a really big one. But even within trade itself, things are not looking good. As we mentioned before, the world won't take this lying down. Big economies like Canada and China, they are raising their own trade barriers. and the US is now preparing to fight an export war with the rest of the world. Trump and friends are considering giving US companies exporter tax credits to counter foreign retaliation. So if Europe decides to slap an import tax, US exporters will eat some of the tariff and get subsidies. This is funny and sad at the same time, especially when the US keeps scolding the world for subsidizing their exports. Trump is now willing to do the same for his own companies. Think about how ridiculous it is. Trump wants to collect tariffs from US consumers and use it to subsidize US companies looking to sell overseas to help maintain their margins. And you best believe all these subsidies will add up. After all, the cost of manufacturing in the US will be one of the highest in the world, especially with their own tariffs. You might as well just U-turn this crazy trade war. But here's how the scheme will work. Let's say GM decides to sell their cars to Europe and their exports face a 20% tariff. The automaker might decide to lower their export price by 10% to compete with Volkswagen or Mercedes. GM will take a 10% hit to their revenue. In return, the US government might give them back half of the financial hit, 5% in export tax credits. Now, they could use this to offset their tax burden, or maybe it'll be a direct cash rebate. At this point, who really knows? However, it does tell us how worried the US government is about this trade war. We better believe that Besant is no dummy. This is the same man who helped Soros to break the Bank of England, so he does have some cards up his sleeves, and these are the machinations going behind the scenes. Trump's trade war is really bizarre, but what's even weirder is how he refuses to admit his plan will drive US trading partners to China.
How do you ensure, Mr. President, that these tariffs don't drive U.S. trading partners into the hands of the Chinese?
I'm not worried about it. I'm not worried about it. If they want to be in the hands of the U.S., they don't want to be in the hands of the Chinese. And the Chinese have turned out to be really not very good at that. People that are with us, they're with us. But we cannot be taken advantage of any longer. I used to watch these deals for years. I've been talking about it for years. I've been talking about it for 35 years, how our country is being ripped off. I mean, 30 years ago it was Japan, then it was something else, then it was another group, then it was China. China's doing the best job of it, frankly. And it's just not going to happen. Not going to happen.
So make no mistake, guys, we are really living in a bizarre world. All these statements are important. The longer Trump refuses to admit the truth, the longer this trade war will rage on. And if you are in the market, strap yourselves in. I can guarantee nothing except extreme volatility coming ahead. But let me know what you think. What other tools will China use to fight this trade war? Will Trump do a U-turn or go pedal to the metal? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.